Welcome back to another Profitless on Purpose podcast, the podcast that speaks to the nonprofit sector from an accountant's perspective, and not just one talented accountant, but three actually. With me this week, I got Mark Palardy.
Hey, everyone.
And Tammy Hess.
Hello.
And I'm one of your hosts, AJ Wheeler. And this week we have a great show. So we have legacy bequest and like giving for wills and testaments, I guess. But how to make that ask, how to make it comfortable, what does it mean, and how many people are not taking advantage, or how many nonprofits are not taking advantage of it right now. And then we talk about taxing endowments and income investments through nonprofits, whether it should be done. Does it sound like a good idea? There's a survey that suggests people are behind it. We'll talk about it. And then 9 things every new nonprofit needs to know. What do you need when you're starting off a new nonprofit? Well, we'll tell you. And lastly, we'll talk about program budgets, what they are, how to make them, what to do if you're over or underspent on them. We'll discuss it later on in the show. Anyway, this week, Mark, do you want to start us off?
Hey, thanks, AJ. Yeah, my first article is called Legacy Giving. Are Your Donors Waiting to be Asked About Their Legacies? This is an article from Amy Silver O'Leary, and it's interesting because it talks about how during COVID-19, there have been a surge of will prep that's happened in the United States, and people are making estate plans in case something were to happen to them and their family. But fewer than 6% of Americans have included a bequest to a specific organization in their estate plan. But conversely, 1 in 3, so 33%, said they'd be willing to do so. So over 17% of donors who said they were open to a conversation about legacy giving had been invited. That means 83% of people who are willing to give haven't been talked to about this. So this article makes a point that it's really important for organizations, for nonprofits, to think about their donor base and to think about how to approach them to talk about legacy giving. If you have 83% of people who are willing to give not even being asked, then they may not be including that. And that's where your 6% comes to, because a lot of people don't want to think about issues such as death. And from both sides, it's a bit of a topic that's taboo and isn't touched upon. But this article gives a couple examples of how that can be done. You could use board members. You can use different people who are friendly with the donor base to kind of get in there and talk about maybe their own bequests or their own plans of estate giving afterward. And also, one of the fears that some nonprofits have is that by digging into that, by dipping into the well to say, well, will you give us a bequest? That's going to reduce annual giving. But surveys have shown, and over time, rather than divert resources from present gifts, legacy giving often results in donors increasing their annual gifts. And I thought that was really interesting because that kind of shows a real commitment by the donor's part, like, well, I'm in here for life, basically, and that they're going to continue to give. So really something I hadn't thought about before. And I was just curious what you both thought of this.
Yeah, I thought it was a really interesting article as well, because I think that a lot of things really are through communication and conversation, right? So when I was thinking about what a great way to reach out to a donor and have that conversation of whether it be the annual giving and then kind of dovetail into the estate and legacy giving and what that looks like, because I think it's easier to do that in a conversation piece versus seeing it on an online type of situation or getting a letter just talking about your upcoming death and what you should do with your donations and what that looks like. That if you do it in a conversational way, it can be easier, because you're right. It's a kind of a difficult conversation. It can be taboo to some folks, and it's also awkward. And how do you really start that conversation or that ask? But I think if you do it in a way where it's an annual conversation, that you're reaching out to your key donors and use it in a really easier conversational way, and you can kind of get what the vibe is from the donee to see if they're interested in having that conversation. But it seems to me that it would be more of a conversation than a flat out ask directly just about their legacy giving. What about you, AJ?
Yeah, actually, I'm surprised the number is as low as what was reported, because actually like starting like 4 or 5 years ago, I was hearing from like development directors that this was something that was like on their radar and was something that they were wanting to go after, were these larger like, or these bequest type of giving ask that would happen. And in fact, if you listen to like the public radio broadcasts in your local area, they actually have like a bequest request that when they're doing their donation drives, and even some like AARP has gone as far as like setting up like wills, you know, like offering like either low cost or free like will and or living wills and such whatnot. And then that's an open conversation once you're in there for the free service to ask if you can, you know, provide a legacy gift in your bequest, in your will or bequest. So I think but it's not surprising that this is often a difficult, I mean, it's already, I think, very hard to ask people for money anyway. And then to also layer on top of that, you know, like the conversation of their imminent passing at some point to then be included in the giving portion. I mean, I guess it's not unsurprising that it's like kind of fraught with, you know, nervous energy if you're trying to attempt something like this. So I guess, you know, I thought the article that Mark referenced, and we'll have in the comment on the YouTube or in the description on the YouTube, is that the suggestions they gave were great, and I think would go a long way in a giving and an asking situation, or being able to set that up to have the conversation around that. So I think it's a good starting point, and I would, you know, encourage even small nonprofits to look into this. If you have like a dedicated donor base that you can tap, and maybe even offer some of those, you know, if they decide to leave a bequest or something, that somehow you can offer them, you know, like some kind of legacy gift to show that they've made that donation. I think is another great example, you know, naming a program or something after them if they're leveraging a large donation after their passing. So
yeah, and I think AJ, to kind of piggyback on what you're saying, from the organization side, I can also see where, you know, we all know nonprofits run pretty thin, right? And they always have a ton of work to do. So if you're in a development department, I could see why this is a problem from the development side, because you're asking for money, you're dipping into the well and making the ask for some funds that you have no idea when they're going to come in, right? So you might be asking for money that's 10 years, 15 years down the road. And sometimes you need to fund that next project or that next capital campaign or just your operations for the next year. So while you can increase your annual fund, it also dips into the like, well, I've got to spend some development resources and some time to nurture and get my donor base to buy into something that's not going to benefit me for quite a while. And obviously you're not wishing for it to come any sooner, because that would be a little morbid. So on that note, AJ, you got another article for us?
Sure. Actually, your subject dovetails well into, I had an article from Philanthropy Today, and it was a very short article, and I did a little more research on what this meant. But there was a survey that was done, and the headline is 71% favor taxing endowment income of wealthy universities and foundations. And so what that survey meant, and what I looked at, it was a pretty small survey, but I guess it was randomly administered throughout the nation to different demographics. So I guess we can rely a little bit on what it's saying. But essentially what they're talking about, and the reason why I think this study was made, is there's a new push for, I guess, new taxation on endowments and like foundation kind of investment vehicles. Currently, they don't pay any kind of tax on those, or pay very little tax on accumulated wealth that they have. And so, in fact, there was a bill that was introduced recently for in Congress that I'm sure hasn't gone anywhere, but it's actually essentially addressing this, where they would take the money from, like, I don't know, Harvard or like the Bill and Melinda Gates Foundation investment things. It would tax them, and then it would then take that tax and invest it in like internships and job training for people outside of a college area. So it would be kind of like redistributing this foundation wealth to outside of that area. But what this means, I think, and I think the crux of this is what the cutoff is and what they consider a large foundation or endowment. Because what could really happen is if they blanket this, then that means that there's a tax burden on small nonprofits that have like, I don't know, a $30,000 or $100,000 endowment that was given to them, that they kind of ink out, a small amount of usable funds per year that they rely on, but that would be reduced where they would have to pay some kind of income tax on their endowment earnings. And also too, it would up their tax bill. When you talk about a 990 preparation, there's something called unrelated business income that if generated, you have to pay an extra tax prep bill for. So anyway, I'd like to get your guys' opinion. I mean, I think on the face of it, it sounds fair, for large endowment funds that are generating lots of return per year that could then be redistributed to other locations to, where people could benefit from that. Or if this is something that should be left alone, maybe. So I'd like your guys' input on it, though.
So first off, I think, I have a problem with the survey itself, where the question is, should these wealthy institutions pay taxes on their income? If you ask average Joe Schmo, should you pay taxes on your income? They're all going to say yes. So, they didn't say, should they pay taxes on the interest revenue that is earned on these endowments. They didn't parse it out in such a way where people would be thoughtful about it. And the results of the survey break down in a very odd way, in my opinion, right? That 76% of Republicans said yes, and 71% of Democrats said yes. I'm not sure I've met many Republicans who love a tax. So I'm not sure that this survey is all that voracious, if you will, or I don't have a great deal of trust in it. But to your point, AJ, that, should we basically redistribute these earnings from the endowments? And I'm really of a mixed mind on that, because I think, especially with large funds and large endowments, there is an art to earning revenues. There's a whole way of doing of generating these funds, and then they are using them for their purpose, for their mission, for their goal. Why should they be penalized because they've been successful? That doesn't feel, I hate to say it, very American to me. And, maybe I think if they are serving the mission, right, if they're using it for unrelated business income, then absolutely they should pay taxes on it. But if they're using it for the mission and the vision, I don't like it. How about you, Tammy?
You took the words right out of my mouth on that last part. I think it is really hard, because if they are using it for the mission and their organization, and now you're saying that they are going to be taxed on it, and that tax gets used somewhere else in a different way that's outside of the organization, it does seem a little bit challenging, I think. And then to AJ's point, in terms of how do you determine the size of what the large, endowment and what the vehicle is, that it could actually hurt a lot of nonprofits and make things a little bit more kind of complex and confusing. So I had a lot more questions, even though it was a very short article. I had a lot more questions than I did opinions or answers for that.
No, I think those are points well taken. And I think, as with anything tax related, more complexity means, more hours for accountants, but that's maybe not always a good thing. So, I think, I think the jury's still out on this, I think, but it'll be interesting to see, how that goes. Tammy, do you have our next article for us?
I do. So I have one from Nonprofit Hub titled 9 Things Every Nonprofit Startup Needs to Know. This article provides key things that one should know when they're starting a nonprofit. They start off with the fact that you can't do this alone. You need at least 3 unrelated board members that believe in the vision and share in the workload. It also reminds us that nonprofits are legal corporations, which means there are state and federal rules, regulations, and documents that one must be familiar with and really understand so that they know what they need to do in order to get started. And one of the key things that it really pointed out to me was the fact that obtaining the tax exempt status takes a long time. The article estimates that it takes 8 to 10 hours for one to fill out the application. And then once it's submitted, the IRS can take months before issuing a determination. The good news is that while you're waiting for that determination, you can still operate, but there may be restrictions on soliciting donations. So again, it's important to read through all the rules and regulations to know what you're able to do so that you don't find yourself out of compliance. Being out of compliance can result in penalties and fees, which may be costly and in most cases be a distraction from doing the work of the nonprofit. So there's a couple of other points that this article mentions that really kind of go hand in hand. It can be difficult for a new nonprofit to obtain grant funding, and they become really reliant on volunteers and personal donations. These can be difficult to obtain if people are not aware of the new organization. So that being said, marketing becomes crucial for a new nonprofit. The challenge, of course, is that it takes time and money for marketing. So I find myself asking, how does one begin to do that as they're building their funding sources and volunteer base? What do you all think?
I think it's always hard because I think people start nonprofits with really the mission and the public service that they have behind them. But then when the rubber meets the road, so to speak, I mean, that's where things get really dicey, is when funding comes around, because to perform this service or to provide the kind of resources that a nonprofit normally does, you need money to do so. And so how do you spend money that you don't have? One of the things that I've seen from successful nonprofit startups is that they're run either to be honest, out of pocket from the person that's starting it, and often there was a lady that she was a foster mom, and she ran kind of like foster care supplies, I guess, out of her garage by herself for years. And what that did was it provided the, I guess the proof of concept, like you would say, for a startup. So you have the proof of concept and people served, and then you can leverage that in a marketing way for both donations, grants, anything else that you can show. Listen, I've been doing this out of my garage, and this is how many people I've served. If I just had X amount more money, I could reach, this many more people. So I think many of the small nonprofits that we did first year audits on when I was an auditor did the exact same thing. They were very specific to one tiny piece of what they were serving or doing, and they were hyper focused on that piece to be able to show results. If you're trying to do too much too fast and you're trying to spread your tentacles or be too, I guess vanilla about it, for lack of a better word, where you're kind of trying to help everybody, you're going to wind up spinning your wheels and not have the money to do so. So I would say being really hyper focused and focusing on the service. And if you're really dedicated to that, often it means money out of your own pocket, even, as you're getting that determination, because the determination letter itself, for it to be filled out, usually I recommend you have a CPA that does that, or a lawyer that would fill that out, so it's done correctly. I mean, you can do it yourself if you can stomach reading the IRS notice and going through the instructions. But I mean, that costs money. And so how much are you, I guess, the person that's starting, or the people that are starting a nonprofit like this, how much you need to really take a look at how much you're able to shoulder and burden personally for a minute before you can show some kind of results to your operations or proof of concept for what you're doing to be able to get others on board with that. It's very nice to have a pie in the sky kind of idea of how to help, but realistically, you need to show results for you to be able to get grants, donors, traction, media coverage, any of that stuff that's going to bring your nonprofit forward is that's a lot of hard work and a lot of probably personal sacrifice in the beginning.
Yeah, I actually really like this article, and I think it goes, if you're starting a nonprofit, I think this is a good article to read before you take that leap, right? I'm going to speak a little anecdotally. Some of you may know that I work with a nonprofit bakery here locally. And when we filed for our nonprofit determination letter, it took 9 months right? And that's straddled years, right? So we're having to figure out as we're operating, whether we can file a 990 or a 990N, or if we have to not file a 990N, right? And so when you get the determination letter, it goes back to the date that you filed so we got our determination and it was backdated. So luckily we were able to extend out our tax deadline and everything worked out. But these are things you don't think about timing wise. Grants is another great example, right? When you are brand new or relatively young and you start applying for grants, one of the main questions that grant givers ask you are, what other grants have you gotten? So, it's like you're fresh out of college and trying to get credit and they ask you, well, what other credit do you have? And you don't have any yet. So, you're leveraging it and hoping that somebody believes in the mission and vision enough that they want to give you your first grant so that all of a sudden you could say, huzzah, I have a grant, I can move forward. So, it's a bit of a slog because you're going into a well-established system of how things work and how grantors who are established, foundations, have a process. And so you need to fit into that process and take the time. And you might need to hire somebody to help you navigate all that. There is a lot to consider. There's another point in this article that we didn't even get to about how important volunteers are and how they come before paid staff. And I've seen this firsthand because we work with a lot of volunteers. And guess what? They can call out whenever they want, and they do. And guess what that means? That means that the people who are dedicated to the mission have to go in and fill in whatever those positions are and help keep the organization going, because you're reliant on a lot of people and a lot of moving parts before you can get a paid staff in there. So, it's a lot to think about, but I think ultimately the rewards can definitely be there. AJ, I think you've got our topic for us this week.
That's right. We continue the budget train rolling here. So this week we're going to talk about program budgets and kind of what are they? How do you perform them? So I guess I think of program budgets and I kind of break them up into two areas. Either it's a self-funded project or program that you're running. So that would be something that would be like internally funded through donations, unrestricted or something like that. So and then I think of like grant budgets or a program budget that's being funded through a funding source that you usually need to provide beforehand to the grantor or the program funder to be able to get funding. So a couple things to think about when you're setting these program budgets up is, of course, what it's going to take to achieve that. And that means hours of people, staffing, project supplies, etc. Also, too, you usually need to build in some kind of buffer there because there's always expenses that come up that are unrealized. But you want to be as close to accurate as possible, especially when submitting to like a grantor. And then the other factor is if it's self-funded, you got to go through the same process and make sure that you have the funds, unrestricted funds available to be able to provide this. So taking a look at the other parts of your budget and fitting that program budget in there needs to be done. The other factor is considering what your admin allocation is going to be on that. So how much admin time it's going to take to support that program is another really defining factor on whether or not this will run through. And of course, when just like any other budget that you're creating, you want to bring in the people that are going to be running the program or affected by it to be able to make sure that, this isn't just a siloed exercise of you scratching on paper how many hours you think this is going to take. It needs to be an accurate reflection of the time and effort needed to be spent and the supplies that need to be spent in that program. So, that's just kind of, I guess, like a starter on this. I'd like to get your guys' take on any other tips, tricks, or kind of expansion on what a program budget entails and how, you can make it less painful, I guess, because all of these budgets take time and I think a lot of effort to put together. And so any advice we can give our listeners, I think would be helpful.
Yeah, I would say in thinking about who you're creating the budget for. So if it's a program budget that's for a specific grant that you're working on, really understanding what the requirements are for that particular budget, because sometimes there are whether it's in our personal life or in nonprofits or for-profit entities, you can create a budget and it's like, oh, if you're close to it, it's fine. If you underspend, it's fine. If you overspend, it's fine. You use it as a guardrail. But in some cases, some budgets are, if you have that money, that's all you can spend or use or get. And if you don't spend it, then you lose it. Or if you overspend, then you have to go through some challenges to try to get that approved or what the steps are for that. So it's really understanding what you're creating the budget for and what the rules and requirements are of how that budget is utilized and used to help an organization. Because that's the only thing that I always see things happening of, well, it's not in my budget, I can't spend it. Is that truly what that means? Like, if it's not in the budget, are you really restricted and not being able to expend that? Or can you have a conversation with the grantor or somebody else in that that's leading the budget or responsible for the budget? Is that something that you can increase or decrease if things come about? So I think those things are good to know. What about you, Mark?
Yeah, I think program budgets are maybe one of the trickiest ones to do because you have a few different pools that you can do, right? As Tammy was just mentioning, you might have a grant, say a $20,000 grant that you know they're giving out $20,000. So then you can pencil out what all those costs are going to be. And as you know, with anything else, there are usually cost overruns in specific areas. But then there are there's the even earlier stage, like, I want to do this project. So how am I going to get funds for it? If it's important enough to the organization, you might decide to use some of your general unrestricted funds towards that. But if you're going for specific grants and you don't know how much you're going to get yet, you might have to have this flexible budget where you're saying, well, if we get 10,000, we can do this. If we get 15,000, we can do this. We can allocate this number of hours to it. And it becomes a real puzzle of, how can I put this together? I mean, they're very interesting to create, but at the same time, it's like, will this program fund? Will it not fund? Will we even get the grant funding? And oftentimes those kinds of budgets you're putting together because you're trying to entice a grantor to give you the money in the first place. So you've got to get really specific with what your costs are, who's the program going to serve, how many people is it going to help, et cetera, et cetera. And then you get in there and you kind of throw a dart at the wall and say, I hope they like this number, because if they don't, you could just be excluded from the running from the first pass without even a chance to be flexible with your numbers. So it's a tricky thing to get right, but as soon as you start doing them, you can and start getting the grants, you can get a feel for what they're looking for and what is an over ask versus, man, I could have asked for a little more and we could have done more with this money.
Well, and you just brought up a good point, Mark, is what happens if they do, they're kind of thinking that this is what it could be, and they're taking a real, guess as to what the expenses are. But then once they created a budget and they found a grantor that's willing to approve the budget and fund that particular amount, what if they find midway through, because it's a new program or it's a new activity, that they didn't budget correctly? And if you're halfway in, are you stuck with that budget? I mean, that's the kind of questions of budgeting is hard in general. There's a lot of, I think we've used the word, the fudge factor, or there's also a lot of estimates and assumptions, but it could be challenging if it's your first pass at a budget and your assumptions are way off on the mark. And then you're stuck with a budget that can't be fulfilled. You can't reach the numbers that the goal was to service somebody, but you also then need more money to be able to do that. And then where do you go from there? Where do you go when you're midway through a budget cycle on a particular program and you're either over exceeding, which is probably a better way to go, but if you're underperforming, then what do you do? What are your options?
Tammy, you bring up a really good point. And especially during this last year, during the pandemic, often budgets were either underspent or they were provided. It was an auxiliary service that came in really, really clutch during COVID, that you were overspent. And I think often people look at a budget and a grantor as a very static kind of, this is how much money we have. But I would recommend, and I've seen it work over and over again, even with federal grants, to go back to that grantor and find out what your options are for either underspent. One example was there was an underspent federal project, and what they ended up able to do, because it was like a in-person kind of training program that they had, what they were able to do is they were able to take $40,000 of the underspent grant money and grant out actually grants to other organizations that could do that work and could use that money that they were partnered with. And the agency signed off on it. They didn't want to take the money back. They wanted that program budget used. The other thing is, like they also the same organization overspent on some county grants, or were close to, like the threshold where they were actually going to have to eat a month of service. And what they did is they went back to the counties and they had extra COVID relief funds that they were able to put in and grant, extra above and beyond for those services. So I would say, like if you're in an overage or an underage, your first step is to contact that grantor and, essentially show them the results or show them the under results and come to them with a solution, or at least a proposed solution on what to do with the underage or the overage of the grant funds. And then another thing Mark said that I think I really want to hammer home is when you're creating these budgets, especially for grantors, you really need to hone in on the number of people served, who's going to be served, how they're going to be served. Often as accountants, we think of like the nuts and bolts of the numbers and how many hours and supplies and everything. But what that all equals, on the other side of the equation is people being served or the service being rendered to the general public. And I think making sure that you can relate like this number of staff hours is going to equal this many number of people served is going to serve you far better than just submitting a bland, kind of nuts and bolts budget to them that this is what we need. And a footnote to that is this is how many people we're serving, or this is how it's, I think the trick, especially to a program budget when you're submitting it to a grantor or a funder, is mixing the qualitative with the quantitative and being able to tell that story of what this budget is going to do. And that's often the art behind the science of putting the budget together. So I think realistically getting those two to marry together in a good way is often what gives you the best results.
And I just want to also add, you said something that really kind of stuck out to me is the fact that you need to be looking at your budget compared to the actuals on a regular basis, because that way you can have the conversation if you need to with the grantor or other individuals if the budget isn't coming to, you're not meeting the numbers against the budget in any direction. So I think that there's always a risk that folks have of they create a budget, it's a nice fancy budget, they spend a lot of time on it, and then they bind it, they put it off on the shelf and they don't look at it again until the next year or until the next period of time. That is not a good way to do it, because you need to be able to look to see how are you actually performing against the budget, and not to beat yourself up about it or to get down if it's not working, but to have that conversation or know when you should start having those conversations to see what you could do differently. Because the earliest that you can have that, the more likelihood that you have of the grantor really being willing to change the budget or do something different, or doing what AJ suggested and changing the budget to fund something else or for another organization. So I think that those are good things to think about while you're reviewing your budget to actuals.
All right, great discussion, guys. Thanks everyone for joining us on another episode of Profitless on Purpose. We really appreciate you spending your time with us today. Please feel free to leave a comment in the YouTube or at us on Twitter at ProfitlessPod. We appreciate any feedback, and we can even incorporate it into the show as we have in the past. Stay tuned next week for another exciting episode. On behalf of AJ, Tammy, and myself, have a good one.
Thanks, everybody.